Welcome, Chris and Kamal. You guys are both partners in Hyperion Decimus, a multi-strategy quant fund. Real Vision viewers will recognize Chris, who's been on the platform with us many times before, and our first conversation with Kamal. Welcome, Kamal. Today, we're here to talk about data, specifically the rich data trails that very sophisticated traders and hedge funds are using in the crypto space to trade right now. Both of you guys have backgrounds in hedge funds, in high frequency trading, and you're doing some pioneering work right now in data, in the quant space. We're very excited to talk about that. Since Chris has been on before, Kamal, why don't you introduce yourself and tell us a little bit about your background, what you did prior to this, and how you got into this space?
Yeah, sure. I started my career at Coronex doing exchange infrastructure. From there, we got purchased by State Street, and I spun out with the CTO. We did high frequency trading for a while in San Francisco. Then I went down to LA, did 7 years at a hedge fund as head of quant research. That's where I got into crypto. I bought my first Bitcoin on Mt. Gox back when it was pretty cheap. And the next year, I was in the Ether presale. And 2017 came around, and things were looking great. So I decided to get out of the hedge fund and found a company in the crypto space called OmniX. So we built the first EMS, OMS for crypto. Company's still going, but I wanted to get back in the trading space, and Hyperion Decimus was one of the first clients of OmniX, and so I jumped out to join the partners in 2020.
Okay, so jargon alert for people who don't already know. Talk about what an order management system and execution management system is.
Yeah, it's just standard software that's used by traders that just allows them. If you think of like Interactive Brokers or Ameritrade or E-Trade, you're looking at an OMS with an EMS on the background. So EMS is an execution management system that'll run algos, it'll aggregate all the pricing, and route orders to different exchanges.
Yeah, and an important piece of plumbing in the system, and something that before it existed, very challenging to do in the crypto space, what you guys are doing right now. So Chris, let's throw back to you. Give us a sense of the big picture of what we're here to talk about today. You're very good at framing out the overall 50,000 foot overview. Tell us a little bit about what that overview looks like.
Yeah, I think you can look at it from price, its derivative, right? Earnings and how you measure the quality, the quantity, the rate of change. Then you've got on-chain data, which is this entire new data series and has new ways of looking at it, right? It may be predictive. All of it amalgamates to liquidity and psychology because that's what makes a market. But
right.
There are different ways of testing for traditional predictive linear modeling against the hash rate, the addresses, off exchange, on exchange volume, all of that stuff in tandem with flows, options, term structures, et cetera.
Yeah, I think that's a very good intro to think about this. And obviously the comparison there being to, for example, US or equities trading in general. You have things that everyone knows and understands who's been in the financial space, price to earnings ratio, price to earnings to growth ratio, all of these things that are very common knowledge that you can, go and read 50,000 books about if you're interested in investing in equities. Now, thinking about what that looks like in the crypto space, this on-chain data that you mentioned, which is this aggregation of all of the data trails that come off of cryptocurrency that are in the blockchains themselves, that obviously, as you suggest, have implications for supply and demand, for price, for momentum, for all the things that investors typically think about in the equity space, in the fixed income space, and other asset classes. Tell us a little bit about what the overall state of play is with on-chain data for people who may not be familiar with it, for people who may be encountering this conversation about on-chain data in relation to trading for the very first time.
Well, I think it's amazing that firms like CryptoQuant, Into the Block, Sentiment, Glassnode, Chain Analysis, they've got an aggregation of all of this available for very low cost. And they've put in front of you at least the bare minimum of what you should be looking at and considering. What we're looking at as investors and then quant managers is the efficacy of the data set, because our approach is always weight of the evidence, right? No two cycles are the same. And the old adage, if everybody's trading off the 200-day moving average, then it lowers the efficacy of it. So what we're trying to do is take things like stock to flow or addresses or flows, size of wallets, and assess whether they have leading or lagging indications or predictive power.
Yeah. Kamal, Chris mentions the efficacy of the data set. For people who don't have backgrounds in statistics in quant, give us a sense of what that means, how you measure efficacy. In other words, how you measure how well this stuff predicts future outcomes.
Yeah, I mean, you're just looking to explain future price movements based on current data series. So you're looking at essentially a correlation, explain some portion of the variance, and that's how you'd measure it.
Yeah, so we're looking at correlations between on-chain data, other metrics, and price. Chris, how would you characterize it? How strong are some of the correlations that you're seeing?
Some are very, very strong, and there are clear ones that don't have any predictive power, and there are a few that have quite correlated predictive power. I think one problem we're having is that there's not enough time series data of it yet to have that hard confidence interval, right? For example, only really 3 cryptos have enough price history and network history to give us our confidence interval to hang our hat on something to that degree. But I think if you're applying principles that are tried and true in equity options, futures, et cetera, starting there and working into applying the signaling or modeling of the new data.
And these are Bitcoin, Ethereum, and Litecoin. Are those the 3, Chris? All right. Before this gets hopelessly abstract, let's actually look at the data. Let's just dive right in and take a look at some of these images that you brought with us. Kamal, jump in.
Yeah. So, the first thing we did was take a look at stock to flow. And, I think it's talked about a lot. There's the Plan B 100 trillion USD model that people have talked about. So you want to see how well does that explain past pricing. So you basically take the stock to flow metric that you can download. In my case, I got it from Sentiment for Bitcoin, Litecoin, and Ethereum. And you can take the current stock to flow measure for those and then regress it against the current market cap of the coin. And if you do that, you get a pretty good model. I mean, it's a pretty good fit. It's, I think the R squared is like 0.78. So that's maybe like a 85% correlation. It's pretty good, but it's not the best.
Okay, so for people who aren't used to looking at this type of data, Kamal, just explain to us visually what we're seeing before us on this chart right now.
Yeah, so what you see are the black dots. Every black dot represents one day, the current stock to flow metric versus the market cap of the coin, right? And then the red line is when you do the regression, the red line is the best fit. So that's the prediction. To the extent the black dots are off the red line, those are errors in prediction. You can see that it's not bad, but you can see that stock to flow has step changes in Bitcoin and Litecoin. It also has step changes in Ethereum. And that's why you see like the kind of, horizontal lines where the market cap changed quite a bit, stock to flow stayed the same. So you can see that there's a lot of room for improvement in that model, just visually right there.
So let's take a look at the next chart.
So the next chart is basically after we go through all of the indicators for on-chain and see which ones best explain the market cap of crypto, we find that daily active addresses and transaction volume in USD, those two together produce this chart right here. So once again, the best fit line is in red. The individual daily market cap for each of those 3 coins versus daily active addresses and network transaction volume in USD.
Now, it's interesting, Kamal, looking at that chart. I'm not a data guy. I'm not, an uber wonk on this, but it's pretty clear that the correlation here is pretty extraordinary.
Yeah, exactly. Like you're up over like 90% at this point. So it explains it very well. So yeah, that's what you're looking at. This doesn't have predictive power, at least to the extent that it might be below the line one day. That doesn't necessarily mean that you want to buy it on that particular day, but it's explanatory in terms of explaining what happened in the past.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.